first and foremost, let me show you the all-time high. I'm super excited. Well, that's not it. Why do I always mess this up? It is January 6th, and this is, of course, the video log that takes 30,000 to a million. After I give you a quick rundown through the account, I'm on all-time high, by the way, again, which is fantastic. I'm going to talk about cyclical, secular, and seasonal trends, and why you need to know these, and what your equity or stock or whatever you're buying, what kind of a trend is it in, and how that helps your investment. Okay, so I think it's kind of important, especially if you're now beginning to invest into things. I think it's really important to know and to be able to differentiate between these different types of trends. So first and foremost, let me show you the all-time high. I'm super excited. Well, that's not it. Why do I always mess this up? I'm going to talk about this company a little bit. $79,206. Of course, could have been higher. Well, it was offset, right? The market was down quite a bit, but silver and gold were up quite a bit in the beginning of the day, Sunday night, Monday morning. But that trend reversed, and you can see how Apple went up, and the rest of my non-precious metal stocks went up, and the precious metal stuff went down. So basically, the market had actually more volatility than than my account did, the entire day. Here, let me show you the the difference in volatility here. So at open, it was negative 0.6%, right? Negative 0.60. And at close, it was plus 0.35. So it swung almost a percent in a day. Just a fun fact, right? What? It just turned over midnight and I can't show you. Maybe I can do it here. Where's 6 a.m.? Plus 0.53. No, it's over here. So plus 1.84 plus 1.8 at the end of the day. So I had a 0.04 volatility there percent-wise. Pretty crazy. So very non-volatile day for me, even though there was huge swings, just because my account is so offset. But I ended up beating the market. I got twice as much gain percentage-wise from the market today, which is amazing. Really happy about that. Anytime I beat the market, super happy. So this is the all-time high, 79,206. Have not added money into this account in a long time. So these are all natural gains. I've gained quite a few $1,000. You can see over here, over the last month, I've gained $3,700 or 5%, which I'm really happy about. 3 months, 8.1% or $6,000, etc., etc. This is the year. It's sitting at 39.9, about 40%. All right, this is the all-time chart. Of course, if you're new to this video log, I started taking this account seriously about August 28th, which is when my first video was published. So yeah, there you go, about 45% increase since then. All right, before that I just didn't have a lot of money. That's why it was pretty neutral. Okay, so moving on. The topic of today is what is a secular trend, what is a seasonal trend, and what is a cyclical trend, and why they're important. Maybe you know what these are already, but why is it important to know what you're purchasing and whether or not it tends to be one of these different types of trend followers, all right? So let me tell you a quick story, right? So in 2011, I was really big, in 2010 maybe, I was really big on the precious metals, and of course I rode the crazy bubble up, and also I wrote it down, not realizing that, precious metals at the time, I didn't realize that they were so cyclical. And of course, I paid for my mistake. And since then, I've learned that when it comes to mining stocks, especially, not the metals themselves necessarily, but when it comes to the mining stocks, They're very cyclical, and you gotta pull money out. That includes uranium. That includes all the other commodity stocks in general. They're very cyclical. Commodities are cyclical, and so you can't just buy and hold commodities forever. You gotta trade them. So that was one of the biggest lessons I learned. And so once I learned that, I started putting more of the profits from cyclical trading to a more secular trend type of investments in order to grow the money steadily. The biggest secular trend that's been in play for like 100 years or something or more is, of course, the American stock index, right? The top companies in the U.S. Some of them come and fall, but the top companies in the U.S. always appreciate over time. That could be considered like um, the Dow Industrial Average, right, or the S&P 500 or something like that. Now, what is a seasonal? Well, let's go into it. I'll give you some example, right? So seasonal is pretty self-explanatory, and you could trade seasonal stocks as well, just like cyclical ones. They're actually probably easier to trade, and I'll show you why. But let's just take some examples. So the shortest duration is seasonal, which is 1 year cycle. Now, what might that be? Well, some commodities like food and stuff like that, where they have to be grown and sold. So obviously, none of this is perfect, right? Because if it was, then we'd all be millionaires, right? We'd all have the perfect trades, and we would be able to make a lot of money, but that's not how it works. So first thing you might notice is that this is almost like a secular trend down, right? Secular meaning over a long period of time. Secular technically is referred to as a trend that lasts for 5 years or more. I consider it more like 10 years or more, but that's just personal preference. One thing you can notice here though is these spikes here, all right? So you can see how there's some big contract rollovers here. This is July 3rd. Let's see what happens next summer at the similar date. Okay, this is June 3rd, June 10th, so less than a month away. There was another significant spike. Let's see if this falls under the same kind of date. Of course, July 14th, July 7th, right? So June, July again. Let's see what happens the next June, July. Well, this one actually, look, we had a spike in May and then a spike in August. So the contracts here, they reversed, so maybe the people got burned if they were expecting the spike, but obviously here is the spike before and after. Let's see over here. Look, again, another spike, June 21st, right? You see all that? So this is a pretty seasonal type of trade that you could be making, and you could, you have a time during the summer every year that you could be collecting some cash and then rolling them over into something more secular. Or if you took, if you sold calls over here, if you sold naked calls, well, let's just talk Robinhood. Buying a long-term put, I guess, for as long as you can, you'd be winning if you want to bet on this secular downtrend of wheat, of the Teucrium wheat fund. What's another seasonal? Well, furniture. People tend to buy homes at a certain time of the year, and the furniture companies, they're a little bit cyclical too because of that. So let's take a look at some of these peaks, all right? So what I'm noticing here is this February, like January, February type of spike that or climb that seems to be occurring in the beginning of the new year. Whether that's in anticipation of new home purchases or whether that's for whatever reason, actual demand, or doesn't really matter. But let's just take a look at these dates and see how they play out. So February, let's take a look over here. Oh, there's February again, right? You can see how there's some kind of climb during February. And now there's probably going to be another. So if you want to trade this, there's a really good chance that Wayfair, who is a furnishing store, online home furnishing store, that it'll go up now because it's almost February and this looks to be an uptrend. So if I was a um, seasonal trader, I would make this bet right now and for the next couple months. In fact, I might actually do it. By the way, this is not financial advice. Of course, you are responsible for all your decisions that you make um, in your brokerage accounts and with money in general. And make sure that if you're confused, you consult a financial professional. Consult a financial professional. I know how to speak English. So let's take. Well, this is easy to see because let's see if this dates back a little bit. What's this little spike over here? No. Let's see if we can find what happened in other Januaries and Februaries. A little tiny spike here in January, not really anything. But you can see this one over here in February 10th, there was definitely a climb. So 1, 2, 3. So you can see there's some kind of seasonality here. And I would expect this trend to be loosely continuing throughout. So that's seasonal stocks, okay? Now, let's take a look at something else, right? What other cyclical type of, and it's possible, of course, to have a seasonal stock like you saw with the previous ticker. It's possible to have a secular downtrend. How do I draw it on your screen? Like this. Secular downtrend. That wasn't very good. How about that? All right, so secular downtrend, and you can have seasonal trends within that secular downtrend, or you can have a secular uptrend, right? And then have seasonal cycles or cyclical trends layered on top of that. 1 second. Heater always kicks in. It's winter time over here. It's cold. That's why I'm wearing no shirt. All right, so moving on. Next, we're going to look at some examples of cyclical stuff. So, like I mentioned, the silver, the precious metals are pretty cyclical. Now, cyclical, in my opinion, is much harder to time than something like a seasonal trade, but the reward is usually bigger. Okay, so let's take a look at SLV here, which is an exchange traded fund that represents the price of silver roughly. The way the cyclical things work is that there's a supply and demand buildup one way or the other, and then it corrects, sometimes violently. So you can see how coming into this, by the way, this downtrend started all the way from like 2011, right? All the way down to 2015 at the end of it. And then the beginning of 2016, there was either a demand or a supply shock. It's hard to tell. Probably a supply shock. And so there was just not enough supply probably. And so the demand was probably pretty static. And boom, look at that. We shot up all the way. Let's see, what is this? Negative 13% to positive 25. So like 40% up within a matter of half a year. So that's a really big swing right there. And then of course the cycle is now done, because usually when the price shoots up higher than it should be, now that incentivizes new production. The market feels that, and now it begins another downtrend until the cycle begins all over again, like it did right here in May 17th, it looks like, is the bottom of 2019. Well, actually, this is probably the bottom right here, September 14th, but you get what I'm saying. So the new cycle begins. Here we are, we have the breakaway, and then this is either a continuation or another correction since the market price reached too high. We'll find out whether or not this is going to keep going higher. My bet, of course, is that it's going to keep going higher. We're not at the end of this upward cycle. And so I've bet pretty heavily on that. I have actually naked silver calls that I bought. So I'm betting on the price of the silver to go up. Now, I think it's going to go up throughout the next couple months probably, at least. So I've been making these silver forecasts for quite a while, actually. You can look back at some of the videos. I mentioned that after this drop right here, I said that was very significant, and it's not likely that we're going to reach a new high in at least 6 months. And it's been at least 6 months now, and so we might be able to reach new highs pretty soon. Okay, so silver, Something else that's cyclical, well, obviously uranium is very cyclical and takes, oh, how about we take URA? URA is the um, it's basically the uranium business exchange traded fund. It tracks kind of like not the price of uranium, but just kind of how the overall health of the businesses, including the mining of uranium and so forth. So there's some spikes here, but that's basically the cycle. But this is actually a much larger cycle. It's part of like this huge move that went from 2011 all the way till now. Has been roughly in a downtrend through all these years, and we're waiting for the next spike up. Okay, where everybody can now capitalize on the fact that they've been waiting for so long for that spike, and it's time to leave the train. And so the train's going to go home empty. So if you try to join at the top, it's going to be a big crash. And it's important to learn that there are cyclical things like that, because if you see something just trending higher, you might think that, oh, it's going to just keep going higher forever, and I should just leave my money here. Like there's no repercussions of doing otherwise. But if you actually look at a long chart, maybe a 30, 40-year chart of something like the gold mining sector, you'll find out that it's been moving with lots of spikes, basically sideways throughout this entire time. And not only that, but it's probably down because of inflation, right? So if we're not judging in the same dollars, same purchasing power as back 40 years ago. And you'd be losing a lot of money if you didn't know that the mining sector was cyclical. If you thought it was just a secular trend up, then you're mistaken, and you're going to lose a lot of money. Now, what is finally, I got to talk about what is a secular trend and some examples of secular trends. So, secular to me is not 5, but like 10 years or more. And, I gave the example of the US markets, which have been in a very big secular uptrend for a long, long time, like over 100 years. Um, but you can take a look at some stocks that have been in a secular bull market since their ascension, right? One of them being Apple, of course, but you can look at Google, Amazon, Nvidia, or any of these tech stocks that kind of they've had peaks and valleys, big ones especially in the 2000, but after that, after the big correction, they continue their way up in 2000, another fall, but then they keep going up and up and up. So let's take a look at some examples here. What's a good example? Oh, here's a great example. The company that I wanted to show you, Monolithic Power Systems. So this company's cool. Actually, the CEO was a client of mine, he's a cool guy, Mike. He has he has an indoor tennis court in his at his work. So pretty cool. And anyway, so I noticed this about his stock is that this is what it looks like. It's just a secular trend up. So when you see the smooth line up like this is a pretty secular trend. All right, it's got little tiny minor peaks and valleys, but it's not seasonal. It's not cyclical. He just keeps improving the business over time, and keeps steadily growing revenue, etc. And this is the result you get. All right, so this is a good example of a secular uptrend. So if you want to grow your money steadily, you can buy something like this. Okay, I'm still sick. Sorry about that. My voice is still a little nasally, so apologies. But I think you get the point, right? So one thing that I started doing now, again, this is not financial advice, but what you could consider doing if you want to trade yet you don't want to experience any of the downsides of cyclical or seasonal trades, then you could quote unquote lock your money into something like bonds, which have been in a secular bull market as well for the last 30 or 40 years. Just like in the market, you could put it in bonds, or you can find stocks like these or indices that have been in a secular bull trend, and keep your money growing steadily over time while you wait for the next season or next cycle where you can make your move again. All right, so that's kind of a win-win strategy. But if, without this knowledge, you wouldn't be able to do it. So there you go. Think about it, feast on, and let me know if you plan on doing something like that, or if you weren't aware that these types of trends existed, or like anything, or whether or not you're applying some kind of strategy based on this. Like, I'd be interested to hear it. So anyway, that's probably it for now. It's almost 20 minutes, long talk. Actually, it's over 20 minutes. I'm gonna end you right there. All-time high. Hopefully, making more money than I am. With that said, I'm out. Peace out.